Today's number, $9 trillion. All right, $9 trillion. That's the amount of the Federal Reserve's balance sheet. And today, well, not today, but the last couple of days, they've been letting everybody know that they are going to be reducing that $9 trillion balance sheet, which for the most part holds a lot of mortgage-backed securities and bonds. It's going to have a major, major effect on the U.S. economy, and we'll be talking about that today during today's show. All right, everybody, welcome to today's show. I'm Kamari Ellis. I'm a tax accountant by day. I help people solve their tax problems, and we are in the middle of tax season, right? But this channel is all about taxes, stock, business, economics. Tonight we're talking about economics, right? Because by night, I like to talk to y'all about financial education with the hopes that everybody can, up level their financial education, get better jobs, get better loan rates, get better investment understanding so they can take control of their money and become financially independent. All right. So again, today we are going to be talking about the Federal Reserve, what they plan on doing as they shrink their $9 trillion balance sheet. And we'll get on the way with that. So as we're going to go on, we normally do our stock market of the day, our stock rundown of the day, talking about the Federal Reserve. And always we have to do our affirmation of the day. Our affirmation of the day. All right, so today was really interesting on the market. As always, it's interesting every day. But we see the S&P 500 closed at 4481, $4,481, down a little bit. The markets got spooked a little bit because of what's going on with the Federal Reserve. They think it's going to trigger a recession overall in the U.S. economy. So again, a lot of people are a little bit spooked. We're seeing a lot of people running from stocks into bonds, right? Matter of fact, we're starting to see mortgage rates go up, right? I'm seeing mortgage rates as high as 4.9%. Just 6 months ago, they were like 2.75%. So again, there's a lot going on. There's a lot going on. Now, the other part of the reason the markets are also falling a bit, the stock market, that is because, again, President Zelensky over in Ukraine and President Biden are calling for the world to announce that President Putin, is a war criminal. So they've been talking about him, how his troops murdered a mayor in Ukraine when they shouldn't have. He should have been a prisoner of war, and they really treated him bad. So that's something that's going to be a further blemish on this war. It's going to keep it going for a long time. But oil is below $100 a barrel. Right now, oil is at $97. So hopefully we will get some relief at the gas tank. Again, Biden is releasing 180 million barrels of oil, right? 1 million barrels per day of oil out of the SPR, the Strategic Petroleum Reserve, to help combat everything that's going on with the war over in Ukraine and Russia, trying to keep gas prices down a little bit, to try to suppress them a little bit. It's starting to work now. Still don't think it's the greatest thing in the world, but hey, we are here, and I'm sure everybody won't complain about getting a little relief in their pocketbooks and their wallets. So again, a barrel of oil right now is $97.40. But oil is still coming down. We're only at 29% year to date. Y'all know, as we talked about it before, oil was up to over 50% year to date, right? From January 1 till now here in April. So again, oil is coming down. Gold, 1929, $1,929 per troy ounce. So again, gold still way below that $2,000 level, right? We're still dealing with the fear of inflation, still dealing with the fear of Russia, Ukraine, still dealing with the fear of China and Taiwan skirmishes. So there is a lot going on around the world right now. I think gold's going to be up, but I don't think we're going to see it above that $2,000 level anytime soon. At least I hope not. Bitcoin. So Bitcoin, 43,000. $43,429. All right, that's what Bitcoin closed at today. People, again, I want you to pay attention to the correlation between Bitcoin and the stock market. Very interesting. Very interesting. Stock market falls, Bitcoin falls. Stock market goes up, Bitcoin goes up. All right, Bitcoin is up. Bitcoin is down year to date, 6.25%. So again, we're going to see Bitcoin really straddle the line because so many people are adopting it. People are starting to flow in and out of it as people want to, what they call risk on trade, right? They call it the risk on trade when people are feeling like they want to take a risk. When people aren't feeling so risky, they then run to bonds, they run to gold, they run to other quote unquote safe things, right? But again, today we're going to be talking about is the Fed Reserve trying to push us to a recession. All right, but what is a recession before we get into this? Media has been throwing around this term all day, has been complaining about this, has been saying, oh God, we're going to hit a recession. Well, what's the alternative, right? And is a recession a bad thing? But as I always like to do, let's break down what the definition is, right? Because a lot of times people throw around terms and words. They have absolutely no idea what they're talking about. You can't put it in proper context. It's just out there floating around. So what is a recession, right? A recession is a period of temporary economic decline during which trade and industrial activity are reduced during generally identified by a fall in GDP and two successive quarters, right? So basically it just means the economy falls for 2 quarters in a row. That's usually what it means. And a lot of times people don't want to look at that as a good thing. They look at it as a bad thing. But here's the thing. Anything that goes up will come down. Sometimes when you run, you have to slow down and walk, right? The thing is, and when we look at the U.S. economy, the economy is still moving forward. The economy is not stopped. We don't have what's called stagflation or deflation, right? We don't have any of that, not at this moment, right? Now, there's still a lot of issues, still a lot of things going on because we still have some supply chain issues. Can't get stuff from manufacturers over in Asia into the United States, even though they've gotten better. And we still have major inflation, major inflation. All right. But let's talk about the story, right? So one of the stories I saw today and my trusty WSJ Wall Street Journal came up talking about the Fed. Fed signals faster pace of rate increases. Bond runoff likely. Ooh. Anybody hear of that before? If you've been rocking with me for a while, been kind of talking about that for a while, right? So minutes show central bank officials in March spelled out plan for shrinking $9 trillion asset portfolio next month to help cool inflation. All right, now, before I go into that, let's talk about that, right? So Federal Reserve, the central bank here in the United States, has their own balance sheet. Their main function is to help the U.S. economy to stay level and to run smoothly, right? Not too high, not too low, right? Their target usually is 2% inflation, right? They just want to keep things growing and moving fastly because you want a little bit of inflation, just a little bit, un poquito. You don't want deflation, though. You don't want the economy to stop growing. And not usually, but GDP is how they measure the economy, right? Gross domestic product. I don't want to just throw terms around, right? And without giving some definition or some clarity. But gross domestic product is basically all the activity that's taking place inside of the United States, whether it be people buying cars, tires, motors, sneakers, food, it all gets counted. And so when people stop buying stuff, right, they stop buying the clothes, the cars, the jewelry, the sneakers, right, the economy tends to slow down or what they call contract. And the Fed doesn't like that. And the Fed Reserve has certain tools that they can use to either speed up people's wanting or ability to spend money, right? That's when they lower interest rates, or they can raise interest rates to slow down spending, slow down investments, slow down business expansion, right? And that helps with managing the economy as well. But there's another thing that the Federal Reserve does, and it's been getting some light. People have been talking about it for a while, but it got talked about a lot. And let's say 2006, 2007, during the Great Recession, got talked about a lot around there. And now they're starting to talk about it now. And that's the Federal Reserve's ability to buy bonds and other investments and assets. One of their favorite things to buy is what's called mortgage-backed securities. Again, mortgage-backed securities. And so they like to buy mortgage-backed securities because the U.S. economy does good when people have money to get mortgages. The U.S. economy does good when people has money to buy housing. And we've seen that, right? We've been seeing people run crazy for housing. Housing's off the chain. Markets are crazy. Markets are super hot. They're not cooling off anytime soon. Now, there's also a little caveat about that. Part of the reason housing is so crazy right now is because builders stopped building houses all around the Great Recession, that 07, 08, 09 period, right? Everything went crazy. People were walking away from their homes, abandoning their homes. We had cash for clunkers. We had the TARP program. We got all kinds of things, all kind of acronyms to help the economy to stay on track, right? Sponsored by the United States Treasury and the Federal Reserve. And so the government will help promote the economy to stay on track. Now, oh, Hayden's here. Hayden, you scared me for a minute. So the economy, the U.S. government will do certain things to keep the economy intact. But now builders stopped building because everybody got shooken out in that whole Great Recession time period. And so what happened? Builders stopped building new homes. And so you have the same people trying to compete and buy old homes, right? The same homes, population's growing. So we have more people, we have more demand. The supply of homes have not gone up. So when you have more demand, prices tend to go up. Not only do you have more demand and you have very, very cheap money. You have very, very high access to capital, right? So you have high access to capital that's relatively cheap. Banks are giving away money for people to go buy homes. And so now inflation is through the roof. And then you couple that with everything that's going on with COVID. Lumber prices have gone up. Cement prices have gone up. Sheetrock prices have gone up. Everything has gone up. It's really crazy right now. And so the Fed, and again, I've been talking about this, the Fed's trying to play catch up, not the food accoutrement, right? Catch up, because they were slow to react to this. Now, I've been talking about this for over a year. They need to hire me for the Fed Reserve Board because I could do their job, because clearly it's documented, it's public information. I've been talking about this. Yes, they were very slow to raise interest rates or basically take money off the table so people can't just go willy-nilly, go buy a business, go buy a home or do anything like that. Now we're looking at home affordability is in focus even more now than ever, because people can't afford homes and or rent, to buy a home rather, and or rent. So things are a little bit crazy. But again, the media is like, recession. Okay, maybe we need a recession. Maybe if prices slow down, maybe people that are trying to get into their new starter homes can actually afford them and not actually buy too much, right? They can do all of that. But let's go through this article real quick before I stay on my soapbox. If you have any questions, right, go ahead and throw them in the chat. Make sure you put a Q in front of them, and I will get to them at the end of the show, at the end of the broadcast. Okay. So Fed Reserve is talking about reducing their balance sheet. Okay. So Federal Reserve officials signaled that they could raise rates by 0.5 percentage point at their meeting coming next month. Now, we know last raise, they only raised 25 basis points or 0.25%. This time, they're talking about raising 0.5%. Now, if y'all remember when they raised rates, I said they should just raise 0.5 percentage point. Stop messing around. Let's get it done. Get it done. All right, but beginning reducing their $9 trillion asset portfolio as part of the most aggressive effort in more than 2 decades to curb price pressures. Price pressures mean that everything is just being priced out the wazoo. Okay, minutes from the Fed Reserve's March 15th, 16th meeting released Wednesday showed that many officials last month were prepared to raise rates by 0.5 point by opting for a smaller 0.25 point increase because of concerns over the fallout with Russian invasion in Ukraine. I think one of them might be watching my show because I said 50 basis points. All right. So officials last month approved their first interest rate increase in more than 3 years. That's totally bananas. Clearly they're sleeping at the wheel, raising their benchmark rate to a range between 0.25 and 0.5%. Now, they always say it's a range, but it's really just 0.25%. They also penciled in a series of additional rate increases this year that takes rates closer to 2%, with inflation having surged to a 4-decade high. Now, I highlighted this because I thought it was really important. Many participants noted that one or more 0.5% increases in the target rate could be appropriate at future meetings, right? Particularly if inflation pressures remain elevated or intensified, the minutes show. The minutes revealed that the minutes revealed for the first time how officials expect to shrink their asset holdings much faster than they did last decade, which would serve as another key tool for tightening monetary policy. Officials neared agreement on a plan that, after a roughly 3-month ramp up, would allow up to $95 billion in security to mature. And so what does that mean, right? $95 billion to mature. And so when we're talking about bonds tend to mature, right? So you buy a bond, and a bond is nothing but a fancy word for a loan. People loan out the money and they say, hey, I want this money back at a certain period of time. And the U.S. government has never defaulted on a loan. So when they issue these bonds or these loans, they are going to pay them back. And so, but what normally happens is when the bonds expire or mature, they reinvest that money into other bonds, especially mortgage-backed securities. They're saying they're not going to do that. So they're going to let $95 billion in securities and bonds mature every month and just let it be cash on a balance sheet. Now, I'm not trying to be too accounting-esque for y'all tonight, right? But basically, they're taking money off the table. They're taking money off the table because they said that basically we're running kindergarten, it's romper room out here. People got access to cheap money, and they're buying any and everything, and it's pricing a lot of people out. We've seen food shortages in terms of chicken wings, right? Chicken wings weren't available. Wingstop had to do 5-stop, things like that. We've seen interest rates go up in terms of 30-year mortgages, right? All of these things have been going absolutely crazy. And here it also says that the Fed plans have sent tremors through the mortgage market, where the average 30-year rate mortgage rose last week to 4.9%, the highest rate since late 2018, according to the Mortgage Bankers Association. Yeah, because it's going to be rough. Now, so ask yourself a question. I'm always talking to y'all about supply and demand, right? People are still looking to buy these homes, but now they have to pay more for the mortgages. So people aren't able to afford the same level of home. So before, they might have been buying a $500,000 home when interest rates were at 2%, 2.5%. Now rates have almost doubled, And so it might be feasible to say, well, now they can't afford the $500,000 home. They might only be able to afford the $250,000 home. So what's that going to do for the $500,000 homes? And for the record, these are just all hypotheticals. This is going to play out in a multitude of different ways in the overall market. But just think about that. How is that going to play out? Especially if there's going to be less money available in the mortgage market. Now, I don't know if a lot of y'all notice, but when people like get mortgages, there's usually an investors or a pool of investors buying those mortgages. It's usually not the bank, right? The bank will do the loan. They might give the money out initially. And then what happens is they'll get a whole bunch of loans that they've done, a whole bunch of mortgages that they've done. Let's say they got 1,000 mortgages. They'll bundle them up and then they'll sell them off in little pieces, like a piece of pie, right? And they'll sell them off in pieces to people who want to invest for what they usually call income. Because every time somebody pays their mortgage, right, it's income. It's relatively safe. And so these banks, these mortgage companies typically sell those off. So it's not necessarily the bank holding the debt. It's these other folks. So the Fed Reserve, again, was putting money into those markets, buying those bonds or those pieces of pizza, those fractionalized shares to keep the mortgage industry afloat and flush with cash. All right. So keep that in mind. Keep that in mind. So again, let me see. Was there anything else in this article I wanted to talk about? So again, I think they're too late. They're $1 short and a day late. I think we're still going to have a lot of issues with inflation, at least for the foreseeable future, at least the next year, 18 months. It takes a minute for economic changes, whether it be from the Fed Reserve or the U.S. Treasury or Congress, to move through the economy and actually become real modern day policy and actually have a change or an effect. It's like if you got a bad report card, I don't know about y'all, right? And I'm not promoting corporal punishment here, but back in my day, if I got a bad report card and I have my report card and I walk home real slow. So it's a delayed effect, or at least what I think is a delayed effect, right? Instead of walking home real fast. Same thing for effects with these mega big economic systems. It's going to trickle down, like they got slow report cards. It's going to trickle down and it's going to move slow. So it's going to take time to get everybody back to normal, or at least to pause and to lower some of the prices of these things that are totally outrageous right now. Totally outrageous. So keep that in mind. Keep that in mind. Things are going to be crazy. Be patient. And what I would say is, again, I think it's okay to have a recession in this standpoint. It's not a bad thing. It's like being on punishment. You got the bad report card. You walked home real slow. Your parents are pissed off because you walked home slow. They know you walked home slow. You got out of school at 3:00. They know you normally get home at 3:10, but you didn't get home until about 4. They knew you was lollygagging, right? You on punishment now because you were delayed in delivering the news. Fed Reserve was delayed, super delayed. And now your parents or the citizens, right, or the constituents are like, nah, y'all go to the room. Just stop buying stuff for a little bit. Save your money. Now, obviously, we got to buy essentials, right? But I know we've been having COVID. I know we've been wanting to be outside, but it might be better to just set some of these things out. Fix up your home, clean up a little bit, spruce up the yard, just enjoy life. Just slow down a little bit and then let the prices do what they need to do. So that is it for me today. But of course, we have to do our affirmation of the day. As always, we have to do our affirmation of the day. And so today's affirmation is, I can handle everything. I'm messing this up. Let me go to the pond here, to my notes. The affirmation of the day is, I can handle this. Everything is temporary. Again, I can handle this. Everything is temporary. Keep that in mind, because I know a lot of people are going through things and they think it's just the end of the world. But if you take a minute, take a breath, and you say, you know what, I've been through far worse. I can handle this. It's temporary. It's not going to last forever. What's that saying? What's that saying? Pain endure for the night, but joy comes in the morning. So, there's a lot to say to being patient. There's a lot to be said about just taking a breath. It's a lot to be said about just sit down for a minute. Just be still. Just be still, right? And recognize that this isn't going to last forever. It's not going to last forever. And you don't need to freak out. You don't need to cuss nobody out. And I feel like there's a theme going on here, right? Because yesterday I was talking about people having road rage. Same thing. Just relax. Just relax. That's all you got to do. Just relax. But today we covered again our stock market rundown. Talked about, is the Fed trying to push the economy into a recession? And we covered our affirmation for the day. Listen, if y'all enjoy these daily shows, do me a favor, like, comment, share this. Now, I'm going to be doing something a little bit different because the algorithms have been a little mean to me. They don't really show me any love. So what I want to do is I want to start an all new YouTube channel, but it'll be all lives. It'll be this stream here. It won't be any pre-recorded stuff. I'll still have this channel here, right? The Finance Rebel channel here on YouTube. Y'all can still follow that, can still like that, but I'm going to create a dedicated channel for this show here every day at 8 p.m. So do me a favor, go on over there. I just put it in the chat. Go on over there and subscribe. It doesn't look like anything now. It just says the Finance Rebel Show, right? That's a bit.ly link there. So the link is bit.ly/FRS NEWYT. Again, bit.ly/FRS NEWYT. So do me a favor, go subscribe, because in about a weekish, maybe 2 weeks, we'll be moving our daily show over there. I'll still have the Finance Rebel channel on YouTube. Again, you all can find that there. Content will still be there. That'll be more for my tutorials, some of my reactions. But the daily stuff that I'm covering every day will be over on the new Finance Rebel Show YouTube channel. Again, the Finance Rebel Show YouTube channel. So again, I appreciate you all. Always humble that you're here. Do me a favor. Always be loved and always seek to be in the light. Until the next time, y'all, I'll see y'all later. All right, that concludes the this session's broadcast. All right. I saw there was a couple of questions, so I said, all right, I'll stay a little bit later. I do got to get back to work, though. It's tax season. Oh, I forgot to mention it's tax season. Right? If y'all have not filed y'all taxes, make sure y'all get them in by the 18th. The 18th is the deadline, right? And if you can't get them in, file an extension. File an extension. So let's see here. All right. So Chrome Lemon, how you doing? Chrome Lemon says, how long would it be before banks start reflecting those higher APYs? It's already starting. The 30-year mortgage is at 4.9%. It's already started. Let's see. Let me see if I can pull up. The rates. I see a couple people here, though. Miss Edith's in the building. Welcome. Shamice is in the building. What do you mean by good morning on the side? Where are you at now? I thought you was in the southern part of the United States. I don't want to give out any locations. I know it's a lot of whack jobs out here. My man Jerry on the East Coast in LA. How you doing? Welcome. Thank you for joining us. What's that? Once he cheated with this election, it was over for America. Who cheated? Talking about Trump cheating? Talking about Trump getting involved with Russia? Who we talking about? Sunshine, welcome. Oh, I missed this one. All right, so it's all Joe Biden's fault. Hopefully, U.S. won't be looking like a banana republic. Yeah, and so I guess the orange monkey who used campaign money to pay for a prostitute, to pay for a porn star, nothing happened. I guess the orange monkey who's been said by legal professionals to be running a criminal campaign. Guess that has nothing to do with it. All right, come on, listen. I'm all for it. Like I said, both parties are trash, but can we stick to the facts? Yes, Biden was involved with the 94, 96 bill. Yep, I'm cool with that. I'm cool with that. I'm cool with admitting that, rather. Right? I'm not cool with it. I think it's terrible. But let's not forget about the Republicans and Nixon and how Nixon said black people were one of the greatest enemies to the United States. I'm paraphrasing here. Right. Jimmy says exactly there's nothing wrong with a recession. No. Come on, folks. I don't know. Hopefully you're not a bot. If you want to have a real discussion, a real dialogue, I'm all for it. It's nothing like getting my juices up with a good debate. Thank you, Ms. Edith. Let's see. All right, Ms. Edith says, everything's moving slow today. Yes, love the affirmation. My director, Mr. Brown. Well, I can't say that. Mr. Brown will remind me nothing stays the same. That's right. Be still is true. Yep. Nah, I don't believe in violence. I only believe in violence if it's self-defense. That's the only time I believe violence is justified. The only time. I don't believe violence is justified when you're just mad at somebody or you can't get along or you don't agree with someone. All right. So Ms. Edith is being a great citizen. Right. She liked, commented, and shared. So she's letting the algorithms know that I matter. All right. Affirmations are extremely important. Yeah. Yes, they are. I believe them. That's why I talk about them. All right. Blocka. All right. I feel this is a Biggie song. Take your money out of banks. We are headed into something we've never seen before. So we've never seen this before. You want to take money out of the bank. So you want people walking around with cash. Like people aren't already getting robbed. I don't know if I agree with that, Blocker. Now, can we look at some other assets? Can we look at some precious metals? Can we look at some blockchain or some cryptocurrency? Sure. But what we going to do with the cash? We just going to have it on hand? And when the boys come through down and kick down our door, what are we going to do? I don't know if that's the way. I saw the saddest thing the other day, y'all. I saw the saddest thing. They pulled up on this old lady, black old lady. She was somebody's grandma. She was walking in the house. Car pulls up on her driveway. They jump out. They jump out on grandma, y'all. Grandma's like, listen, I ain't with this. You could have everything. She starts throwing her everything, all the contents of her pocketbook at the assailant, at the robber. And it was like she didn't want to be bothered with it. And it caught the guy, the robber, the assailant off guard. But grandma got away and grandma lived. But we know it don't always end out like that. So you're saying to tell people to take their money out the bank. So then what? Do you really think the United States government is going to let the banks go out? We forgot about too big to fail. All right, banks will take your cash or yes, invest in crypto. I mean, I don't have a problem with crypto. I don't. But cash will always be king. Cash will always be king. Tone Anderson in the building. What's up, brother? We got golf coming up soon. I know I've been tardy for the party. So where should you put your money? I'm still a big believer in the stock market. Crypto's cool. Just know that you got to be ready for the up and down for the ride. It's going to be a bit of a roller coaster. We are still at all-time highs. We are still at all-time highs. That's all. I believe you're in the mortgage market. What are those mortgage rates looking like? What you seeing out there? Oops. So I got distracted for a minute um, by the Biden comment. Sorry, y'all. I was supposed to be pulling up the 30-year mortgage average. Let's get at that. Let's get at that. Let's get at that. Let's get at that. But why? But do me a favor, because y'all are here. Who's here? Right? Chime in. Let me know where you're hailing from. And let me know what some of your biggest concerns are right now as it relates to finance, money, and economics. I'm going to stay on for maybe another 10 minutes or so. I ate a little snack. Before I got on, so I'm not dying of those. Show this here. Let's show this. Let's show this. So this is the 30-year. Look at that jump. So this is the 30-year mortgage average, right? So I got the trigger here is over. That is December 20th. Excuse me, that's December 1, 2020, right? Mortgage rates were 2.62. Again, this is an average, depending on your credit quality and some other factors. Some rates are higher, some rates are lower, but it's an average. Again, here, July 1st, 2021, mortgage rates 2.74. Let me look here, November 21st, 3.05. So this sucker has just been running. Now, I am curious. So when I start looking at charts, what about mortgage rates, Tom? I thought, yeah, what are you seeing in the mortgage markets? All right, we got that. Now, Blocker, I agree with this. We are in total agreement here. The markets are falling-ish, right? Feds are steadily manipulating it. Yes, they are, but everybody should be benefiting from it because you had the ability to invest in the stock market. So the stock market has been running since March 9th. It's either March 9th or March 6th of 2009. So we got roughly a 13-year bull run in the stock market. At some point, we need a little pullback. We need a little rest. We need a little breather. Yes, and 50 basis points is definitely coming. Should have been here. They should have been raised 50 basis points or half a percentage point. So I agree with that. Yep. It is good. I think it's good. It's just like having too much food on your plate. Your belly's full, you got a stomach ache, and your ass is so greedy, you just gonna keep eating because you don't know when to stop. At some point, you're gonna get sick. The body is going to say, no, I can't take no more. I'm going to throw up, or I'm going to release in other ways, right? Don't want to be too explicit. So you have to balance, right? Life is about balance. You're never too high, never too low. You're always going to be seeking some kind of middle ground at some point. Right now, we're super duper high. What up, Thunder? How you doing, brother? We're super duper high. So at some point, we got to level off. Now, I don't have a crystal ball. I don't have any bones or any tea leaves, so I don't know when that's going to happen. Right? I don't know when that's going to happen, but all you got to do is look at history. We've been here before. We've seen this before. You've seen this before. We go back to this rate, to this chart. Matter of fact, let me do this. Let me do this. So this is the problem with looking at charts. Like, this is when my super nerd comes out, because now I want to look at everything. I want to look at the correlations between things. I want to go back 20, 30, 40, 50 years, sometimes longer, just to see how different things, different relationships come into play. All right, so we're looking at mortgages, right? So let me do this, because I know I saw, and then I'll come back to the charts, but I know I saw mortgage rates at like 4.9%, because I talk to some brokers pretty often. So let me see this here. And since we're here, if y'all got questions, just go ahead and throw them in the chat. If you got a Q, just put a Q in front of it to let me know it's a question. Throw it in the chat so I can get at it. Here, hold on, hold that thought. I'm coming right back. Let me just. Lumber prices are flirting with crucial levels as mortgage rates jump. So something has to happen, right? Something has to happen. We can't keep on this path forever. Can't do it. All right, here we go. 30-year fixed mortgage crosses 5%. So it's higher than what I thought. It's 5%. I said 4.9%, so it's 5%. At some point, people are going to get priced out. So it's going to slow up. Will it stop totally? No, I'm not saying that. I'm not saying that at all. I am saying that it will slow up, right? That's economics. It's economics 101. Economics 101. All right, Blocker says, I think they have no choice but to let it crash. Game over. It's not hate, but we have to be realistic. I mean, I'm good with a crash. I'm okay with a crash, because you know what happens when a crash comes? Opportunities appear. Right? What did Rothstein say? When there's blood on the street, be ready to buy. And so when there's blood on the street and you want to be ready to buy, what do you need? You need cash. Cold, hard cash, baby. There's a reason why I say cash is king. Yes, credit's important too. And everybody's running around, jumping around, falling and fainting over credit. That's cool too. But a lot of people don't have great cash machines to pay for their credit. That's why so many people are in debt. Everybody can't deal with the temptations of credit. They're not built for it. They're not built for it. Senator's asking the question. All right, where can I get that hoodie or a t-shirt? So there is a group on Facebook called Black-Owned Businesses, run by my man Amir. You could also find Amir under Good Beard Day. So he doesn't sell these as much anymore. I love this sweatshirt. I love the t-shirt. If anybody is still on Facebook, do me a favor, tag Amir. What is let me see, I don't know if I can tag him here. But tag Amir on this, and he can definitely get it to you, or I can connect you to. But Amir's a good brother. So, all right, I got to come back to charts, right? But I wanted to just show this real quick. But the ads don't want me to be great. Give me 1 second. Now, I'm about to come out with my own line of merch as well. So stay tuned for that also. Now, if I could just get this. Oh, yeah, I got it. There we go. Everything's moving really slow. There we go. But that was weird. That was weird. My apologies, y'all. But I wanted to show you this one thing real quick as we talk about mortgage rates, because everything is really crazy right now. And it's going to continue to be crazy for quite some time. Hey, Robbie, are you here? You was hiding? You was being shy today? I think my internet is feeling a little out of sorts right now. So I wanted to show this clip real quick. Let me know if y'all can hear it. Do me a favor, if you can hear this as soon as it comes up, and of course the ad is coming up, but put a one in the chat and let me know if you can hear this.
When it's real.
Nah, you're good, Robbie. It's all good. It's all love. All love, baby.
Herbal essences. Feel what's real.
This is a huge, I mean, these psychological numbers matter. Now, we may not see this filter through into actual closings for, I don't know, maybe a week or so. What's your guess?
Well, you'll see them in the mortgage applications a week from now. So we'll get that data next Wednesday. But yes, it's going to affect home refinances, which have already dried up pretty majorly. And again, anyone out shopping for a home right now knows how competitive this market is, how incredibly pricey it is. And these higher rates are just going to push more people to the sidelines. And remember, we are in the heart of the spring housing market, the all-important season.
Anything you would add, Diana, amid the comments from Fed officials about the balance sheet today, about the possibility of selling down the mortgage portfolio, or their concern that we just heard from our guest top of the hour that because of high rates, the pay downs may slow down. And that's actually a problem for the Fed if it wants to tighten more quickly.
Well, we've already seen that they're pulling out of the mortgage market, which essentially propped it up from the beginning of the pandemic. I don't know if you recall, but in 2020, all I kept coming on your show saying was we've hit another record low on the 30-year fix. So now it's just going in the opposite direction. And with inflation, it's just making it so much harder for consumers out there shopping for a home.
A banner afternoon with the 30-year fix back above 5%. Diana, thank you very much.
Whoa, we are in trouble, folks. 30-year fix about 5%. Rough. Again, I don't think the housing industry is going to fall apart, but we're definitely going to see a bit of a slowdown. All right, so what are you saying, Blocker? They're trying to push us to saying you will own nothing and be happy. Very sad. But I hope we as a people are really waking up to what's going on. So listen, we could always talk about they, and I don't think you're hating, right? But we know what the program is. At any point in time, it doesn't matter at this point. We know what it is. We know it Willie Lynch laid down. And guess what? At this very time in history, we have more access to funds, capital, movement, upward mobility, and what are we doing with it? So at some point, we have to look at ourselves. We got to look at the man and woman in the mirror and say, what am I going to do? What are we going to do? We still glorify foreigns and all kinds of luxury brands that don't support our community. We do all kinds of other crazy things that don't support our community. And so at some point, you have to say, we are not leveraging everything that we possibly can leverage and utilize. That's at the tips of our fingers, like literally. How many people are walking around with a phone? They got the power of the sun almost in their pockets, and we won't use it. You can find out almost anything on Google, or at least have a starting point. We still got a bunch of dummies running around. I hate to say it like that, but all right, uninformed folks. I mean, at the end of the day, we can only complain about the man having that foot on our neck too much. At some point, we have to say, I'm going to stand up. I'm going to start doing something different. I want to learn something different. I mean, that's all you can do. In my opinion, that's all you can do. All right. Robbie says, when rates get to 7%, can I sell my mortgage? You can sell a mortgage if you are in that industry. Now, on your home, no, because that's a whole totally different mechanism. Buying and selling mortgages, like it's a package. They become securitized, right? Your home mortgage is one of those because you don't technically own that mortgage. Your bank, your servicer owns and controls that. So, and honestly, why would you even want to give it up? Because you probably paying 3%, 3.5%, 2.5%, something super duper low. So you got cheap money right now. Why would you want somebody to take over your mortgage? Why would you want somebody to take over your mortgage? Oh, okay. So you want to sell your home. Airbnb it. Or rent it out. Have your tenant pay for your mortgage. Build equity in the house. Get the tax deduction with the mortgage interest. Unless you just don't want to be bothered with that. But I don't know. But let me know when you're going to make that move. But you got options, right? You know everybody, Robbie. If you want to move, get you a good property manager. If you want to keep it. You may not want to keep it, but if you want to keep it, because I'm sure the area you're in is going to do nothing but go higher anyway. It's already been going higher. So, oh, that's aggressive. That's aggressive. All right. That's dope. But if anybody else has any other questions, I'm going to chime out or check out and go get my vittles. Like I said, I'm a little okay because I had a little something to eat beforehand. But listen, do me a favor. Like I said, we're going to move the show to my new YouTube channel. So do me a favor, go over there, subscribe to that channel. I would appreciate that very, very much. Very, very much. Now, I put it up there earlier. Oops, wrong thing. I got to clean up my back office here. There we go. Thank you, Hayden. So just go to bit.ly/FRSNEWYT. So basically, it's Finance Rebel Show new YouTube channel. That's all it is. So, again, any questions, comments, thoughts, concerns? It's a lot going on. Any suggestions for any upcoming shows, just let me know. All right, y'all. So I'm going to get out of here, and I will see y'all tomorrow, 8 p.m. Hold on. Just as I was about to leave, Robert just said good night. Good night to you as well. Make sure y'all go subscribe to the new YouTube channel. Have a great one, y'all. See y'all tomorrow. Later.